Hello and welcome. You tune into Market Fatafat with me, Ankita Saxena, and with me is Snehi Shah. And this is the show where we are getting you all the buzzers that are buzzing away in trade on the back of news floor, on the back of technicals. But Snehi, in today's trading session, practically the entire market is buzzing. You name a stock and it's doing pretty well.
Absolutely.
Indian markets are on fire today. Of course, that 90-day reprieve that's coming in on tariff, that is really cheering the market today. And Nifty is up almost 2% in trade.
Absolutely, looking very good, and in fact we're almost at the day's highest point when it comes to the Nifty. A 450 point intraday gain coming in for us, and we're around the 22,850. We've stabilized here for quite some time, so at least it's looking like we'll maintain these levels, because remember at one time we were struggling to hold on to the 800 level, but nonetheless we're looking good above that right now, and just slightly off the day's highest point is where the Nifty is right now. Let's pull up the Sensex and see what the Sensex is up to, because at one point we were seeing a 400 point cut coming in from the day's highest point on the Sensex, but right now it looks like Sensex is also holding up pretty well in today's trade, and a 1.9% almost gain coming in, and almost at the day's highest point is also where Sensex is. But while this is what the benchmarks are doing, let's take a look at what the broader markets are up to in today's trading session. And in tandem with the benchmark, Nifty mid cap is up 1.8%, almost at the day's highest point is this as well. Nifty small cap also the real winner in today's trade, and the biggest winner rather, a 2.5% uptick coming in on the Nifty small cap. Remember in the AMFI data that we saw today, the small cap space has seen equity inflows addition of 10% on a month-on-month basis. The small cap space has been a buzz and is also looking very good in today's trade today, 2.5% higher over there. Nifty Bank 1.7% higher. Let's take a look at what Nifty Bank is doing. That's 1.7% higher in today's trade. Advance decline ratio very much in the favor of the advances today, so that's also looking good. Hindalco, Tata Steel, JSW Steel, Coal India, so it's basically the metals that are up and away in today's trade. These are your Nifty winners. 7% uptick coming in on Hindalco. That's also holding up the Nifty quite firmly. On the flip side, Apollo Hospital, Asian Paint, TCS and HDFC Life. TCS of course on the back of its earnings that slightly mistreat estimates. So these are the 4 stocks in the red. Otherwise, the remaining 46 stocks in the Nifty are in the green today. Very quickly sectorally, of course, Nifty Metal, your biggest gainer, 4.5% higher, followed by Nifty Energy, Pharma, Media, Auto, Bank, Realty, PSU Banks, IT and FMCG. IT and FMCG, the two defensives, are the least losing sectors, least gaining sectors, pardon me, but still 1% uptick coming in on both of these indices. And nonetheless, the entire market and all the sectors are in the green, so looking quite good for our markets right now.
All right, market's looking pretty well right now. But let's get on board our guests then on the technicals. We're joined by Akshay Bhagwat, and from our research team, we're joined by Rapinder. Hi, good afternoon to both of you. Thank you so much for joining us. Let's get started with all the stocks that are in focus today then. First up, let's look at the gold financiers. In fact, Muthoot Finance and Manappuram Finance that are in focus today on the back of that RBI draft gold lending norms. Now, there are a couple of brokerages that came out after that. Nuvama has come out with a note that says that RBI's new draft gold financing norm will be negative for the growth. Though they are less strict than fair, the LTV definition has been tightened more for the NBFCs than the banks. Now, the LTV of 75% or less will need to be maintained through the loan life, failing which there will be a penalty. Now, this rule already exists for banks, but it's a new rule for the NBFCs. The income generation loans need not be shown as gold loans, but as classified as for the business use. Now, the new norms will impact the growth of the NBFCs more than banks, so Muthoot stands to be most impacted. So, Morgan Stanley also has the same stance, saying that the NBFCs are likely to get more impacted by this. They are saying the estimate for Muthoot, the counter-cyclical business could still ensure stronger earnings versus the other NBFCs. That's what Morgan Stanley is also saying. Macquarie also says that it's a more punitive step as far as the NBFCs are concerned. CLSA says that relief that bullet loans and renewals are not discounted. RBI's LTV cap may hinder loan growth, but the earnings remain protected for Muthoot and Manappuram. That's the word coming in from CLSA. Kotak Institutional Securities have downgraded Muthoot Finance to an add from a buy, and they've cut the target price to 2,250 rupees. So that's the word coming in from the brokerages. Manappuram Finance currently is in the green. It was trading in the red earlier in the morning, but on the back of that, Muthoot and Manappuram both are in focus today.
Absolutely. Before we move move ahead, let's quickly address the flashes on the bottom of the screen, and now you have it on air as well. We are just getting word from agencies that China is also all set to increase tariffs on US goods to 125%. Remember, the recent tariff that US charges to China right now is 145%, and against that, in a retaliatory mode, China has said that they will ignore the US if they keep increasing tariffs on China. And right now, China has also hiked the tariff it charges to US at 125%. So tariff wars have intensified. We'll have to take a look at how the Chinese futures are doing and how the US market is all set to open up today. On that note, let's just quickly take a look at what the US futures are doing, and that will just be loading on my screen in a second. You have, you have a 2.5%, okay, so that's the way a Dow has closed rather. Futures, let's take a look at what's happening. You still have futures in the green right now for your Dow, S&P and NASDAQ. S&P futures are up 0.6, NASDAQ is up 0.8%, and Dow futures are up 0.3%. But we'll give that rate some time to adjust, because we're expecting to see some cuts coming in across all of these three futures. So we'll come and revisit that in some time from now. But European markets, well, Stock 600 flat, DAX was down 0.1%, FTSE also down 0.2%. All eyes are going to be on how these markets perform today, especially the US, when it opens for us in the evening on the back of this trade war that has intensified. China will be increasing tariffs on US goods to 125% from the current 84% effective 12th of April, which is tomorrow. So the trade war between these two nations has really intensified. It's a 145% tariff from US to China, and in retaliation a hike from 84% to 125% from China to US. So this is going to be important to watch out for in terms of how these markets perform. And while we are away for a long weekend now, how our markets will also perform when we return on Tuesday as well. But on that note, let's get a move on and talk about some other stocks that are in focus, and let's welcome on board Akshay once again. And Akshay, the stock that you've picked out for us is HUL in today's trading session. This stock is doing pretty okay. If you talk about the entire FMCG pack today, that's lagging behind the entire market in terms of the sectoral moves, but nonetheless it's in the positive. Now if you talk about HUL, if I pull up the charts for HUL, it's not done all that much. In fact, it's been rather tepid. So what's your outlook on HUL going ahead?
Good afternoon. So if you look at the last 3-4 trading sessions, FMCG did make a strong comeback, and really HUL is my top pick because 2200 support has been strongly seen demand action, and this stock has broken out of the last 3 week of trading resistance around 2300. That gives it a positive momentum on the technical charts, where you can possibly see the stock heading for upsides till 2500 in the coming days. So in the FMCG pack, HUL has the best price setup. 2275 is a good strong support building up, and you can consider buying the stock with the stop loss below 2275 for potential targets till 2500.
Okay, so that's the take on HUL and the levels that you're supposed to be watching out for. Let's talk about Deepak Nitrite. That's a stock that's in focus in today's trading session, and this is on the back of a new manufacturing facility that its arm, which is their subsidiary, is planning. So the board of its material wholly owned subsidiary, Deepak Chem Tech, has approved the setting up of a manufacturing complex to produce phenol acetone and isopropyl alcohol. Deepak Chem Tech will undertake the project for manufacturing 300 KTA of phenol, 185 KT of acetone and 100 KTA of isopropyl alcohol, including greenfield infrastructure capex for an aggregate investment of about 3,500 crores, and shall be funded through a suitable mix of debt and equity. DCTL has already signed agreements to acquire and shift a PC plant from Germany to India, and when finally completed, Deepak will be one of the most integrated producer of PC from the above phenol and acetone capacity expansions that they're undertaking. So positive news flow coming in for Deepak Nitrite. That stock is almost at the day's highest point, a 5% uptick coming in just on an intraday basis for this stock.
All right, moving on then from Deepak Nitrite to NTPC. Akshay, and NTPC again a counter that a lot of techies are keeping on their radar. Tell us, what are you seeing on the charts for this one? Last 1 month it has given some good moves of 9-odd%. You see a breakout on the charts for this?
Yes, absolutely. If you look at the price structure, with all the kind of volatility we are noting across the market, this stock somewhere has held its ground around the levels of 340, 350. and after a sideways consolidation, it has come back very strongly on an intraday note. So a base of 345, 350 is set on the technical price charts, and the way this stock is setting up, possibly 375, 380 would be your short-term targets you can look forward to. So consider this as a good trading opportunity. In the power sector, this stock has an excellent setup, and would recommend to buy NTPC with stop loss at 342 for a potential target of 385 to 390.
All right, that's NTPC on the chart, a bullish call coming in on NTPC. But moving on to another counter that is doing very well for itself, and that is SRF, which is trading with gains of almost more than 6%. It's up almost 7% now. The company has commissioned and capitalized a new facility for producing an agrochemical intermediate at Dahej in Gujarat, and this has been done at a cost of 235 crores. On the back of this capacity expansion, SRF is up and away 7% in trade.
Okay, looking good for SRF as well today. Ravinder, you've picked out an earnings candidate for us, TCS. Well, the numbers were slightly below street estimates, and the stock has been flopping in the red and the green both sides today, so it's not been doing all that much. But tell us what the street verdict is, and tell us what brokerages are saying.
Well, as TCS has reported its Q4 FY25 number, and the company's revenue saw a uptick of 0.8% quarter-on-quarter basis at rupees 64,479 crore in Q4 FY25. However, the profitability declined slightly, with PAT down 1.3% quarter-on-quarter basis, and EBIT was also down by 0.4%. The EBIT margin slipped by 28 basis points to 24.2%, and in dollar terms, revenue stood at $7,465 million, which was down 1% quarter-on-quarter basis, and TCS has crossed the $30 billion annual revenue mark for the first time, marking a significant milestone. And if we talk about segment highlight in Q4 FY25, then the communication and media reported a degrowth of 9.8% year-on-year basis in constant currency, while life science and healthcare also reported a growth of 5.6% year-on-year basis. If we talk about geographical performance, then the North America registered a degrowth of 1.9% year-on-year basis in constant currency term, and Asia Pacific reported a growth of 6.4%. And there are also some brokerage note coming in on TCS, where Citi has maintained a sell rating, but they have cut the target price to rupees 3,000, and UBS retained a buy call with target price of rupees 4,250 per share.
Okay, so that's the take on TCS and what the street has to make out of these numbers. But once again, just quickly drawing your attention to the bottom of the screen, we have more flashes coming in based on what Chinese authorities are saying, and agencies tell us that China says that US should bear responsibility for tariff damages. China says US tariff is economically meaningless, and China says that they no longer make economic sense. It would no longer make economic sense if US imposes more tariffs. Remember now, just take a look at what the futures are doing. They have sharply slipped into the red, because at one point, just a couple of minutes ago when we addressed this for the first time, you had Dow and S&P that was still in the red. In fact, your S&P 500 was as high as 0.7%, the futures rather. So now the futures have slipped into the red, 0.3% cut on the futures for Dow Jones, and rather flat for S&P. Nasdaq still holding on to very minor gains, but expected to come into the red anytime soon. And this is on the back of the news that China has now imposed tariffs of 125% from 84% earlier on the US, and this is effective tomorrow. Remember, right now US charges China 145% tariff, and in retaliation China has upped their tariff from 84 to 125%. But on that note, let's move on and keep it going with all the stocks that are in focus in today's trading session, or rather on the charts as well. And Akshay, you've picked out Federal Bank for us on the charts. Last 1 month the stock is up by 6%. YTD is given a slight bit of a negative return, and 6 months it's not done anything at all. So slight bit of an uptick coming in the 1 month. Do you believe that this could sustain and the stock could pick up some momentum now going ahead?
Yeah, absolutely. If you look at the mid-small, private banking space, last 3 weeks, although there has been a lot of momentum happening in the banking pack, this stock has strongly held out its support base at 185 to 190 zone, and we are noting a small pickup in the delivery base as well at these levels. So technically, this is positive on the charts. I'm expecting momentum to get back soon on positive momentum. The positive momentum gets back once we have a breakout above 193, which in all likelihood I feel this should happen next week. And if that happens, we are looking forward for targets of 200 to 205. So a positive chart structure from a short-term trading perspective. By Federal Bank at the current market price, short-term volatility it will be digested, but overall with a stop loss below 184, you can look forward for targets of 205.
All right, moving on then from Federal Bank on the charts to another counter, that's Coromandel, that's in focus today, and that is in focus today on the back of the fact that the agri solutions provider has further strengthened its long-standing partnership with the Saudi mining company Madain, one of the world's largest producers of phosphate fertilizers, by signing a memorandum of understanding or an MOU. This strategic partnership will help Coromandel ensure timely availability of D-ammonium phosphate or DAP and NPK fertilizers to the Indian farming community. On the back of that, Coromandel is in focus today. In fact, it was up more than 3%, has cooled off from the day's highs, but nonetheless is still up in a way 2.7% in trade.
Okay, so that's the take on Coromandel International. Why the stock is in focus in today's trading session. In fact, let's move on and talk about yet another high flyer today, and that's Tata Steel. On the back of some remodeling plans that have been announced by their Netherlands arm, Tata Steel Netherlands has announced a major transformation program to enhance competitiveness. What they said that challenging demand conditions in Europe have driven by geopolitical developments, trade and supply chain disruptions and escalating energy costs have affected the operating costs and financial performance of that particular arm. Comprehensive transformation program built on a multi-pronged approach of maximizing production efficiencies, lowering fixed costs and optimizing product mix and margins is what they're aiming for, and this reorganization is expected to unfortunately lead to a loss of 1,600 management and support function roles. On the back of this, let's understand what brokerages are making of this stock and the development. ICICI Securities has retained a buy rating on Tata Steel with an unchanged target price of 180 rupees. Antique has maintained their buy rating with an SOTP target price of 152 rupees per share. So that's the take on Tata Steel. Stock up almost 5% as we speak.
All right, so that's Tata Steel on the back of that news flow. But actually, coming to you, PFC is the name that you picked out for us. Now, PFC is another counter. PFC and REC, both of these counters have had rather bullish brokerage notes that have come out on them. You've also picked it out for us today. Tell us, what do you see on the charts for this one? It has corrected in the last 6 months. From here on, do you see this moving up?
Yeah, absolutely. So financial services is one strong index I'm looking to, and if you look at the price structure of Power Finance Company, this has kind of been consolidating in a sideways price action since the last 7-8 trading sessions, but 395-400 zone is a very strong support base which is gradually building up in the stock. Momentum will resume once the level of 410 is taken out on the technical price chart, but I believe it's under an accumulation, and with the market stability, if we do see it next week, then this may take the lead where targets of 445 to 450 should be in the making. So hold or buy PFC from a short-term trading perspective. 382 is the stop loss and 440 is the targets you can look forward to.
Okay, so those are the levels to watch out for when it comes to PFC. And Ravinder, coming to you, HAL is the stock that you've picked out for us. I believe it's on the back of a brokerage note. Tell us what it is.
HAL is in focus where Motilal Oswal has initiated a coverage on HAL with a buy rating and target price of rupees 5,100. They say that HAL is transitioning from a licensed manufacturing model to a more indigenized approach, and HAL is expanding its Nashik facility, which is expected to be operational by H1 FY26. Which significantly boosts its production capacity, and the next major analyst will be finalization of rupees 65,000 crore order for 97 Tejas. They say that the revenue is expected to post a CAGR of 29% over FY25 to 27, which is primarily driven by a sharp scale up in manufacturing, and the revenue from repairs and overhauls and spare is expected to grow at 5% CAGR, and EBITDA margin are projected to remain robust at 25.9% in FY25, 27.4% in FY26 and 27.6% in FY27. So back of this brokerage note, stock is up over 2%.
Okay, so that's the reason why HAL is in focus. Let's talk about another stock that's doing pretty well today, and that's Sun Pharma. A US court has lifted launch restrictions on Leqselvi, and Sun Pharma has received a favorable ruling from the US Court of Appeals for the Federal Circuit, which has lifted the preliminary injunction that had delayed the launch of its drug Lexelvi in the country. The ruling, which is effective immediately, allows the company to proceed with its launch plans, although legal proceedings with Insight Corporation remain ongoing. Lexelvi is a medicine used to treat severe alopecia areata. The medicine was approved by the US FDA in July 2024 for its treatment for adults, but was not launched in the US market due to this legal issue that has now been solved, and the ruling has been in favor of Sun Pharma. On the back of this, Investec has maintained its buy rating with a target price of 1,980 rupees. Jefferies has maintained a buy with a target price of 2,265, and Nomura has maintained its neutral call target price of 1,970 rupees per share on Sun Pharma. Very positive news flow on Sun Pharma. That's the reason why the stock is in focus.
All right, positive news flow coming on the back of that drug launch for Sun Pharma. But moving on, Akshay, you picked up Bank of Baroda for us. Bank of Baroda has given some really good moves in the last 1 month. It's up 15%. From here on, do you see this positive momentum continuing for BOB?
So banking is one sector which has very strongly held out in the last 10 to 15 trading sessions, and the Bank of Baroda from the PSU space has been trading strong. The prices are currently above all the short-term moving average which we actively track. There has been strong volume build-up around the levels of 225 or levels, which makes me believe that the stock is under accumulation, and possibly I'm expecting the momentum to return in this counter, which can see the target of 250 to 255 being achieved soon. So it's a buy on Bank of Baroda. The price support is 225, below which you can maintain your stop loss, and the target area would be around 255 on this trade.
Okay.
All right, so that's the word coming in on Bank of Baroda. But moving on to another counter that's in focus today, and that's Greaves Cotton. Well, the engineering company has announced a partnership with Chara Technologies to revolutionize the electric mobility landscape by leveraging Chara's rare earth-free motor technology. Now, Greaves will manufacture synchronous reluctance motor and controllers exclusively at its Shindra Aurangabad facility, catering to both automotive and non-automotive applications. In the back of that, Greaves Cotton is up and away 4.6, more than 4.5% in trade today.
Okay, so that's the reason why Greaves Cotton is in focus today. Akshay, coming to you, Bajaj Finance is a stock that you've picked out for us. Interestingly, a lot of analysts these days are picking out Bajaj Finance and Bajaj Finserv on the charts, and they're rather bullish when it comes to both of these counters. Do you share that view as well? Do you concur when analysts say Bajaj Finance has a good run lying ahead of itself right now? What's the levels that you're spotting?
So absolutely, this is one stock which has nothing to do with the market volatility around, because last 4 months, if you look at the price structure, it's been a one-way move from the level of 6,500 to 8,947 where it currently trades. This has seen a multi-year breakout in Bajaj Finance from 2022 to 2025. Levels of 8,000 breach, which we saw a couple of weeks back, is a very positive development on a positional front, and every bar dip is being bought into. That's the sense you get looking at the price action, and in all likelihood the prices are suggesting that 9,500 to 9,700 are in the making. So these are the targets you can work with in Bajaj Finance from a short-term perspective. 8,600 is the support base which is building up, so your stop losses should be below 8,600 for potential targets of 9,700.
All right, that's Bajaj Finance on the chart. But Ravinder, coming to you, you picked out BHEL for us. Tell us, why is this counter buzzing? I believe there's an order win coming in for this one.
Well, Bharat Heavy Electronic is in focus, where company has signed a MOU with Nuvomo Pigeon International, and BHEL shall be a main bidder to identify customer for addressing the compressor train revamp business opportunity in fertilizer sectors in India, and Nuvomo Pigeon International will be a nominated vendor to BHEL to the subject main MOU with definitive scope of work. And the rationale and benefit expected from this MOU is that BHEL will be able to address compressor revamp opportunities in fertilizer sectors in India after a strategic tie-up with the Nuvomo Pigeon International, with approx business share of almost 50% in the financial term, and BHEL market share is expected to improve in fertilizer sector from R&M business.
Okay, so that's the reason why BHEL is in focus. Almost 1% gain coming in on this stock. But on that note, that's the last stock that we could squeeze into this edition of Market Fatafat. Akshay as well as Ravinder, thank you so much for joining us. On that note, we'll let you go. But
well, with that, it's curtains down on this edition of Market Fatafat. Snee and I will take a leave. Thank you so much for tuning in. Don't go anywhere. Market action continues on ET Now.
If you like this video, then like, share and subscribe to ET Now.